strategy is based off of is short-term trend shifts. Okay, so we obviously, everybody here knows we go to the 15 minutes to see what it's doing a little bit longer term. Then we're going to shift into the shorter term. And what we're looking to do is let the market tell us what trend it's on, and we find our opportunity to join it. We want to get into that market and get out of that market before the trend is done. Sometimes those trends will run longer, sometimes they'll be short, right? But we want to get into that market before that trend ends. Get into it and get out, okay? The best analogy that I can have is it's like a surfing analogy, right? We paddle out, these EMAs are waves. We're waiting for that perfect wave to come. We paddle out, there's a few things we need to see before we're going to get up on that wave, and that's how we use this indicator. That's what it's based off of, right? We want to get into these short-term trend shifts so that we can get in the market and get out of the market, right? That's the plan. And this strategy is based off of moving averages. Now, if anybody ever asks you, some people might have a little bit of trading experience. I am not a fan of oscillating indicators. So those are things like your TDI, your RSI, Bollinger Bands, so those types of things. I'm not a fan of oscillating indicators. Those things are called reversals. Okay? And sometimes they're going to help you with trend. And so this is a trend indication strategy. We are looking, trend is our friend, but we were looking to find direction, and everything on this is going to help us with being able to find that direction, right? So, based off moving averages, okay? So we're just going to go over next 10 minutes or so all the pieces of what's in Killshot, okay? And then we're going to talk about, and then we'll get onto the charts. We'll talk a little bit about what we're going to see, okay? So, we have 3 EMAs, okay? We have our red EMA. So if anybody doesn't know what EMAs are, exponential moving average, okay? That is these lines on the chart, okay? The 20 EMA is the moving average of the last 20 candles. Whatever time frame you're on, the last 20 candles on that time frame, okay? So this red line here is the moving price average, right? So this is the price average of the last 20 candles on the chart, okay? And just if anybody ever asks, this is not a lagging indicator. This indicator has almost no lag in it. Most indicators have a little bit of a lag. This one does not, okay? So the red EMA is the 20, the blue EMA is the 50. So we have a short term, okay, or we can call it the fast EMA, and then we have our slow EMA, or a little bit of the longer term, right? That's the 20 EMAs are fast, and the 50 EMA, or which lots of people refer to as the aqua, is our long-term EMA, okay? When those cross each other, it indicates a short-term trend shift, right? As you can see, that's where our signals come from. They come from that cross, right? You can see 810 to 741 here. There was a nice 70 pip sell, which would have closed off the day already, right? And we can see that these short-term trend shifts, if we pay attention to what the longer-term trend shift, will have a high probability of going to profit, right? But this one here, this one did not, but it was right down in the zone, which is another reason why we want to use some of these rules. And I'm going to tell you guys as we get on here and as we start to move forward, right? This is not perfect. Anybody who tells you they have an indicator that's perfect and crazy and blah, 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 and, oh man, you just can't lose with it, they're full of it. As any indicator, any trader, any of those things, this just is a tool to give us an advantage, which it does. And sometimes it gives us, like yesterday, it didn't have a signal that didn't go into blue. Not one signal yesterday would have been directly to a loss. Every single signal yesterday had an opportunity to get pips. That doesn't happen all the time, but sometimes those days come. Okay, so we are based off of these 2 EMAs shifting. That includes our trends, our longer term trends. Okay, based off these EMAs. Okay, so that is where those triangles come from. When the 20, which is the shorter term EMA, gets over the 50, which is the longer term EMA, When it gets on top of it, you get a buy. When it gets below it, you get a sell. Short-term trend shifts that we're just looking to join. Okay? That's how this indicator gives you signals. Okay? Now the next EMA that you can see on here, for some reason I think that's just quite a bit more than the other ones, but you can see this. Their EMA here is the 238. We're going to teach you guys, we'll have a whole class just on this 238, how to use it better, how it helps you, indicate the trend, how it's a reversal level, where it comes from. Okay? Essentially, the 238 is the 50, as you can see right here, right? 790. Why the 238 is 790? Because it is 791. It is the 50 on the 5, right? Or the 50, it's always the 50 on the next time frame up. Just gives you another indication of where that, where that chart might want to come back to before it might reverse or break or head in those other directions. Okay, so that's the 238. Okay, and then on the chart, we have what we call our histogram. Okay, our histogram here is the colors behind this chart, which, as you can see, right, when this thing shifts into red, right, into a red signal, the histogram goes red. This is to help you not trade against those signals. You don't ever want to trade against one of these signals. Okay? And even though, you could see it push back up here, we don't want to take that signal, but we don't want to trade against it, because very well could break the 238 and up. Okay? And that's the histogram. That's what this color in the background is. Okay? Now, let's talk about our stars. And like I said, don't worry if you don't quite understand what some of these things might mean, and we will get to calls where we're going to go over these and just spend a whole 20, 30 minutes on explaining them more. Okay? The stars. Now, this was something that came for me as a scalper, something that I knew that I really wanted to teach people and really wanted to help people with, was I wanted to teach them how to exit. Because as scalpers, sometimes we don't know when to get out of these things. When we should put our stop loss into profit, when we should just take 30 pips, 50 pips, those, or should we let it run, right? We don't know that as scalpers, because sometimes our trades can run and run and run when we scalp. And sometimes they don't really going to want to go 20 pips and come back to us. And so these stars are early reversal warnings. So we want to protect against them. So these are my exits. When I saw, say I got into this sell, this green star that's over here actually popped right here, right? And so I'm in this sell, right? I might be holding it a little bit. When it broke this support line down to here, this green star would have moved to there, right? This green star would have been here, would have moved over here, then eventually landed over there. But when I saw this green star, that was my warning to protect my trade. Right, so I got into this thing, I was being patient, came all the way down here, it was up 10, green star popped, I'd have been like, okay, I'm just going to drop my stop in here into some blue and protect it. Okay? That's to protect against these reversals. And as you can see, eventually these stars turn into really big reversals, right? Right, they turn into these reversals. So that stars were the opportunity, right? Okay? Were the opportunity for me to protect. Okay? That's what these stars are. And you can see we're going to have a whole day here next week where we go over just what the stars are, what the yellow ones are, what the blue ones are, what the red ones are, what the green ones are, all those things. Okay? So those stars were our early warning signs. Okay? The next thing we're going to talk about here is we will have a full day on this as well, is our POC. Okay? As you can see, this trend table is going to give you what the trend is on a longer time frame. Right, so you can see the 15 would have been down. We would have been looking for our opportunities to head down with this, right? So our trend table is going to give us an automatic, so we don't have to switch back and forth to different charts. We don't have to, go over to this time frame, come back to it, right? We can see in this timetable that we're on a downtrend, so we'd be looking for those signals in that direction, okay? You have your trend table here. The next thing we're going to talk about is our point of control. Okay? Point of control here, we call it the POC. Now, like I said, I'm just going over the basics of all these things, so you can kind of be like, what's this line, or what is that, or anybody who's brand new, what does it do? We're going to go over, like I said, all of these in every one of these pieces of the scanner will have its own call, where we're going to go over it a little bit. But our point of control essentially is a volume profile. Okay, this is a place where money's sitting. Okay, we want to know, right, where there's a bunch of money sitting. This line here is essentially where the highest amount of volume was, and that's where the buyers and sellers were fighting over the market. Right, who's going to have control of it, which direction they want the market to go, and as you can see, if it moves away, heading down, moves up, right? If it's heading down, the sellers have control. If it's heading up, buyers have control. So we want to know. It's another one of our confirmations, right? Which we're going to go over tomorrow. We'll go over some rules and some confirmations. It's another one of our confirmations, okay, of direction. We're just trying to take a bunch of these things and give us the best opportunity to tell us what way this chart wants to go, and we're going to follow it. Okay? So that is what this POC is. So if we're looking for sells, we want it to be below, and if we're looking for buys, we want it to be above. Okay? And that's our POC and our trend table that you can see sitting right here, right? Which we're going to go over, like I said, we'll go more and more depth as we go through. Okay? Now, the last thing that just got added here about a week or so ago is our trade time. Okay, and we'll have a whole call that goes over good and bad volume. Sorry, guys. We'll also have share the PDF through this. Sure, that's all right. Okay, but we have good and bad volume times. Okay, so we want to trade in good volume. Now, what does that mean? People are like, what's good volume? What's bad volume? Blah, blah, blah. Right? Okay? Good volume is when the market is the most likely to be trading. Okay? So something you guys will find here to trade with me is that I avoid volatility and I look for volume. Okay? Right? I avoid volatility and I look for volume. So what I'm looking for is when the volume is going to be the best. Right? That's why I don't trade news. I don't trade news events. Anybody who trades news events is not a long-term trader because there's too much volatility and too much risk in trading right in the middle of the news. And anybody who does that, it's too risky of a trader, and while news may run and give you a ton of profit, it will do the exact opposite as well. So, okay, I'm looking for volume, not volatility. I avoid volatile markets, and I look for trending markets. Okay, I don't want to be in here when open comes and a bunch of basket orders. I don't want to be in here for that. I don't want to be in here when the Feds are talking like they are tomorrow. I don't want to be in here in those moments, because something I learned along the way, we're going to talk about entries when we get to risk and reward, is that if I got patient and focused on my entries, I could have whatever parameters I want. And so if I'm chasing volatility, where I think, well, I just want to take one trade, it's going to run 100 pips. If I'm chasing volatility, that little 25, 30 pip stop loss doesn't tend to last very long. And we want to avoid those. But just like we don't like this consolidation, let's wait for this thing to see if it wants to get back up above here. Man, zone, eh? Zone playing over and over and over again over there. We'll talk about that when we get to the charts. Okay? So we want to see this to be green, right? This is going to go red at 7 o'clock-ish until about 7:45, and then it'll go green again, and then it'll go off. We're going to go through all the trade times. Okay? So when this is green, will be the best time to trade. We're also editing this so that everybody doesn't have to change their time frames and all those things. Okay? So it's the first kind of 20 minutes of our call, just to go over all the pieces of kill shot, just so you understand, maybe some of those questions needed to get answered. So here they're answered. Okay? And that's, these are some of those things that we can look for. Let's be a little bit closer. Okay, so you can kind of, some of those questions you might have, what does this do? What does that do? What does this do? And so just to give you a better description of what kill shot is and where it came from. Okay? And kill shot really came from me trying to find something. The number one thing I always get is, hey man, how can we just trade with you all day long? Can you just stay on Zoom and we can just lock in and trade with you? And of course, while I would love to do that and help everybody, Jay's still got to live and have some life, right? So I created this tool, so it is like trading with me all day long. Okay, so that super important. That's what it came from. That's what it's here for. And essentially, when you jump on here and you see all these things telling you what the trend is and where the POC is and what's next and where it's going, it's like Jay being on here with you. Okay? All right, let's set this chart up now. About 10 minutes or so. Oh.